Hey everyone! Welcome back to the channel. Today, we are diving into the recent surge in the US stock market, specifically focusing on the impact of AI profits and falling oil prices. Now, this might seem like a straightforward financial update, but there's so much more to uncover here. So, let's break it down. First off, the US stock market hit record highs, and it's all thanks to the tech giants and heavy equipment manufacturers. Palantir Technologies, for instance, saw a massive 29.5% surge in its stock price after reporting a 93% revenue jump in a single quarter. That's what I call an otherworldly performance. But it's not just Palantir. Caterpillar also climbed 5.6% after surpassing analyst expectations with its profit and revenue figures. And get this, Caterpillar's CEO, Joe Creed, mentioned strong order rates and a growing backlog, which is a huge deal in the context of the AI boom. Now, here's where it gets interesting. The AI boom is not just about tech companies, it's also about the infrastructure that supports them. Caterpillar's turbines, for instance, are in high demand due to the increasing need for data centers. So, when we talk about the AI revolution, we are not just talking about software, we are talking about the hardware that makes it all possible. But it's not just the tech and heavy equipment sectors that are thriving. The overall S&P 500 index is on track for a nearly 50% earnings per share growth in the spring, which is a huge deal. This growth is being driven by strong corporate profits, and it's making stocks look less expensive. In other words, the market is correcting itself, and that's a good sign for investors. Now, let's talk about the oil market. Oil prices have been on a wild ride, swinging between $72 and $102 per barrel. But recently, they've taken a nosedive, dropping 5.3% to $79.36 per barrel. This is a significant move, and it's all about hope replacing fear. The market is betting that the war with Iran will eventually allow oil tankers to resume normal operations, which could mean more oil flowing into the global market. Speaking of the market, the yield on the 10-year Treasury has also fallen, making it more expensive for Americans to borrow money. This is a double-edged sword. While it makes borrowing more expensive, it also means that the market is correcting itself, and that's a good sign for the economy. So, when we see these corrections, it's important to remember that they're often a sign of a healthy market. Lastly, let's talk about the chip sector. Nvidia, Broadcom, and Micron Technology all saw significant gains on Wall Street, with Nvidia leading the charge. But there's a catch. Chipotle Mexican Group took a hit, falling 9.7% after removing jalapenos from some of its restaurants due to a salmonella outbreak. It's a reminder that even in a booming market, there are risks and challenges that companies need to navigate. In conclusion, the US stock market's record highs are a testament to the resilience of American businesses. The AI boom is transforming industries, and the falling oil prices are providing a much-needed boost. It's a complex and dynamic landscape, and it's important to stay informed and make informed decisions. So, what are your thoughts on this market surge? Let me know in the comments below, and don't forget to like and subscribe for more insightful content. Thanks for watching.